Welcome back to the group again. Okay, this is a video lesson I want you to focus on mostly. uh we are going to discuss something that I use when anticipating a trap is about to happen. Okay, you will understand it what I mean by it when I show you. Okay, as you can see right here, the delivery is bearish in it. So if you go to the higher time frame, which follows it also, as you can see here on the daily time frame, this candle, after taking out multiple old highs, reaches inside a key fair value gap area and starts to displace downward. So until where we could expect the price to deliver is until here, because there is no fair value gap right here. As you can see, all fair value gaps are mitigated, so there is no fair value gap created here. So the only fair value gap is here, and the candle that creates is this one. So until here we could expect the price to drop, because the reaction is going to be around here. So if the delivery is bearish, when we see a bearish shift on a 15-minute time frame, as you can see, this high rejects a key level around here. Okay, which is a support becomes resistance zone right here, and gives us a shift following with a break right here. Okay, so we know if a break happens, the high, which is the break, this low forms this high, this swing high, is going to be our inducement level. So if we know that, and we know this high is protected, how could we find? Okay, this is a rejection high which rejects this candle right here after taking out liquidity. As you can see right here, this candle rejects this open close level, support becomes resistance level. So if we know this high is protected, how could we find an area of interest inside this long wick? So in our entry models, we used to trade, if we see a candle that creates a fair value gap, we will take that. So inside this wick, there is no fair value gap that creates the fair value gap. Okay, it is just a wick. So when this happens, when you see this long wick forms, okay, you don't need to focus on the wick, which is like I said before, I'm gonna say it again. Wicks are inefficiencies. Okay, they are also inefficiencies. Okay, so don't mind this candle being formed. Okay, there is no, we are not going to do 70-50% for this one, because we can see a structure right here. As you can see, don't forget if this is formed or not. Okay, if you see from this high to this low right here, there is a fair value gap here, the candle that creates the fair value gap right here. So we are going to use this one also. Okay, we don't care if this wick forms or not. We know this one, but like it is a source. If we see a rejection area right here, what I really wanted to show is when price starts to displace downward before reaching in our area of interest or in our key level, which is a trap is coming. Yeah, it's going to come again. So when we are anticipating a trap, there is a model I've been working on. Okay, I want you guys also to know it. Let's check what is going to happen before price. As you can see, okay, right here. Okay, this high, okay, I know this high is going to have a trap. Okay, this high is going to be taken out. Why did I say that? If we go to the 5-minute time frame, okay, right here, what do we have? A turtle wick soup right here. But when this turtle soup occurs, okay, the 15-minute doesn't follow it. Okay, the 15-minute doesn't agree with it. It just like forms in displacement we're in. But like the 5-minute time frame, as you can see, a turtle soup, which is a bearish, is incoming. Yeah, but our key hasn't been tagged in, right? Our key level hasn't been tagged in. As you can see, I think I make the area of interest too high, but like we could use this level or no. Okay, we will see. Okay, we will see what is going to the price going to use, but I want you to focus on taking out this high. This high is going to be taken out. Why? We have a turtle soup on a 5-minute time frame. The 15-minute time frame doesn't agree. which means the high, like I go one time frame above the 5 minute to 15 minute. You will do the same for other time frames. Okay, so how do we use this one? Okay, the point is how do we trade this high is going to be taken out? Where are we going to do our anticipation of the buy setup? Okay, the continuation buy continuation. So you can see after price right here, okay, creates a turtle soup, starts to displace the upward. Okay, so as you can see, what we are going to do when we see this one is we will count on the time frame that disagrees with the turtle soup happening. Okay, which means as you can see on 15-minute time frame, we have this fair value gap, the first area of interest. Okay, we are going count from high to low. Okay, so there is a fair value gap inside here and the order block here. Okay, it doesn't matter if another fair value gap is here or any area of interest is here. Okay, which I want you to know is if it is a rejection block, we are going to use the second one. Okay, which I mean by is, as you can see, let's say this happens after creating this one. Okay, let's say this candle is the one that doesn't agree with this high. Okay, when price starts to retrace to the downside, we are going to count this as a first area of interest. Then the second area of interest is this rejection week. It's gonna be like that. Okay, I will try to find another examples, but right here this is the fair value gap, first area of interest. The second area of interest is this order block. So our area of interest is this candle. Okay, the low is not going to be taken out, and we could target, okay, the high. Okay, we could target at least this high as a buy side liquidity. So let's see if this area has a structure inside it. Okay, if we go on a 1 minute time frame, which aligns with the 15 minutes, 1 minute, yeah, you know that. So right here we have a break. Okay, this is going to be the shift right here. So this, after shift we have a break. We are going to do the same we are doing right now. Okay, this is my own model. I'm trying to work on it. I'm going to post another multiple examples if I find so. Okay, so this low, okay, took out a sell side liquidity right here. After taking out a sell side liquidity, okay, we get what? A break. A shift is going to be here. The higher high that creates the lower low, this low is this one. So we are going to consider this as a shift, but this is not actually a shift. The shift is here. So we are going to treat this as a break. So like I told you, when there is a break and inside it we have what? Internal break again. Yeah, if the internal break is inside the break of structure right here, okay, we are going to treat this low as if it is a liquidity. Okay, I'm not going to go and search other key levels or blah blah. Okay, what I'm gonna do is, I know this low is protected because of the reason I told you. Okay, I'm going to trade here. Actually what I can do is, when I refine it is a liquidity, as you can see for this candle, the last liquidity was this one, which means after this candle forms, a guy puts his buy here. Someone bought here. After this liquidity has been taken out, okay, the zone is going to be now active liquidity, as you can see right here, which we are going to call a reactive liquidity. So what I'm going to do is, I know this is a liquidity, the low is a protector, so I'm going to take the trade here like this, okay, which is not even a 1 pip stop loss. Target where? Here. Okay, it is a high probable setup. Okay, it is high probability. I will do a refinement if I find another things. I'm going to let you know, but if you see something happening here, okay, something like this, it is because of this one. Okay, if the 1 hour gives us a turtle soup and the 4 hour doesn't agree, we are going to use the second one. Okay, on 4 hour time frame. Think of it when making it on a daily time frame. Okay, it is going to be a lot of pips. Okay, so we are going to buy here. Let's put this limit. Wait, let's do this. Let's go to 5 minutes. Okay, we got tagged in, as you can see. Okay, where was the entry we took? Right, this low, right? We didn't find any key level or anything else, but we just took the liquidity as if it is our area of interest, and we know the protect the law, so we use the dot level. Yeah. Mm. And here we go, the TP, as you can see right here. We TP right here, as you can see, which means the trap, or on a 15-minute time frame, or even in a higher time frame, we are going to treat this as a short-term high for reversal. Okay, we are taking this level because they didn't even reach in our area of interest, right? So this was our buy side liquidity, which is targeting the short-term high. Okay, no need to confuse. If even if like, don't force it. Like, if you see this setup, it is going to be high probability. This is at least 33 RR, as you can see. And the key level I talked about right here. Okay, so you can see there is a fair value gap. Only fair value gap has been made here. The candle that creates the fair value gap right here, right? So we could take trade here. Okay, and target where the sell side liquidity we talked about. Okay, which is this level. Here is it, the TP, as you can see. Before reaching in our, like, we know we need to enter inside intermediate term low, intermediate term highs, right? So before that, we know there is a short term high that must come to make this high intermediate term high. So this forms, okay, when this short term high forms, as you can see, we can target the short term high by trading like this. Okay, you can do it even if 5 minutes, 3 minutes, that doesn't matter. Okay, also on a gold, it is very high probable trade. Okay, take this trade, back test it, and you will get it. Okay, if you have any questions, you know what to do. Send it to my DM, and I could, if I could answer, I will answer it to you guys. If it's not, I'm gonna do my research and answer it anyways. Okay, safety, guys.